now I would like to move on to the main focus of our presentation and introduce Joe Phillips, who is the CEO and Director of Macarthur Minerals Limited. Joe Phillips was previously the company's CEO in 2015 and was responsible for the original funding and development of the company's significant iron ore assets, having completed its 2012 pre-feasibility study for the Ring Hematite project and obtaining environmental approvals. Mr. Phillips was educated at the University of Queensland, and he combines strong project management skills with a discipline in economics and a detailed understanding of the operation of public administrations and the elected governments in Australia. And so we're very happy to have Joe back with us today. It's very early in Australia, but Joe, we're very glad that you're here with us. And without further ado, I won't delay any longer. I'd like to invite you, Joe, on to begin your portion of the presentation.
Okay, thank you. Start my video. I've got it. Can everyone see me?
Yep, you're coming through clear.
Okay, thank you. Look, thanks everybody, and thanks to Jordan, Neil, and Danny for their kind words. Jordan, if I can get you to go to the corporate overview, I'll start there, please, and we'll take the disclaimer as read. Look, before we start, I'd like to acknowledge some people that have been with us a long time. Out of Europe, I've got Fritz on the line today, and welcome, Fritz, and I hope you're reaping the rewards of the uplift in the stock price. Got Reid Rubin out of New York. I met Reid back in 2010, and Reid's been a long-term shareholder of Macarthur and a very, very loyal investor. And welcome back, Reid. Rob Caldwell, there's a name I haven't heard for a while. Rob and I did some business out of Hong Kong back in 2010, 11 and 12. And again, Rob's been a long-term investor in the company and a promoter of the stock. Greg Donat rang me yesterday from New York, and Greg and I were working closely on a transaction with a big American company, Cleveland Cliffs, back in 2018. Matthew from EAS Advisors is on the line. Welcome, Matthew. And we've got Sarah Leonard for the first time. Sarah, I met in Toronto in 2020 at the PDAC conference, at the Stockhouse conference. Sarah and her CEO impressed upon me the need to enhance our digital communications, and we then engaged Sarah alongside Neil, and Sarah's been looking after our Australian and European pitches for Macarthur Minerals, and she's done a marvelous job. So thanks, Sarah. And finally, Frank Ferromo's on the line. And can I talk about Frank? He's got a little news agency on the corner of Yonge and Bloor Street in Toronto. And Neil and Frank and Neil are well known, but Frank rings me month in, month out, just wanting to know how the stock's going. And he and his family have been accumulating, a few shares. I mean, 2 or 3 million shares over the course of the, last 5 or 6 years. He rang me the other day and he said, Joe, thanks for making a difference to my family. And look, I took a lot of warmth from that, and I really appreciate shareholders that take the time, and not only in the bad times and tell you all the things you're doing wrong, but in the good times when they reach out and thank you for your efforts. So let's get to the presentation. As you can see from the corporate overview, we've climbed a long way in the last 2 or 3 months. In May 2020, I gave a presentation and I talked about a range of things. I talked about route to market, and I talked about the efforts that Macarthur was undertaking and the prospects that we had in relation to below rail, above rail, and port access and port unloading. And look, I'm really pleased to say that over the course of the last few months, we've been able to deliver a majority of that. The port still remains available. There is capacity at the port, and the fact that the port's owned by the West Australian government, that the port has capacity, that we're probably the only other customer that can use that capacity. I'd be fair to say that between now and Christmas time, we've got a fair shot at securing some tenure there. The other good thing we talked about was our resources, and last year we did a drilling campaign and we drilled out our resource and we've announced that to the market. A technical instrument will be released to the market in the next few weeks to support that resource statement. But we've got our tonnes for the first 10 years in the right categories now to complete our bankable fees. So all's going well there. We've secured our tenure in relation to access, to land adjacent to our tenements that we'd need for plant and various pieces of equipment. So that's done as well. We've maximised returns, I suppose, and as we've been ticking the boxes and going through the program that I talked about last time, our share price has been gradually lifting, as you can see. So it's risen from 19 cents back in May 28 through to 65, 67. I think we've dropped back a little bit today. Neil tells me that there's been a bit of a general sell-off, but look, it's only a couple of pennies. But the beauty of it is that as we increase our market capitalisation, it makes the people that we do business with, and I'm talking the West Australian government and the Ports Corporation, it makes them take us seriously. And somebody said to me yesterday, what are you missing, Joe? Well, look, the answer is really simple. If we were BHP, Rio, Fortescue, or Vale, or Teck, and we went to the West Australian government and stood there and said, we want access to your port to export X million tonnes of iron ore, they'd chain my legs to the ground so I wouldn't leave, so I could get a commercial deal from them. It's a little bit different from Macarthur. We've got to earn our stripes, and that means solving the problems below rail, above rail, getting the customers and our offtake partners in place, getting our resource drilled out and our investments done, so we can provide the government some certainty. And as we do that, our market cap grows, and that's what's happening. So the investors' support in growing the market cap of the company is having a marked bearing on our ability to deliver the final piece of the puzzle for us, which is securing capacities through the Esperance port. And I've very boldly said that we're as close to that as we've ever been, and I'm putting a marker so that next time we speak before Christmas, I hope to be able to tell you some good news. So, and the final prediction that we talked about back in the 28th of May was the fact that the iron ore industry was going from strength to strength, driven by steel demand. Back then, the iron ore price was a little bit over $100 a tonne. It certainly kept on climbing, and it's fair to say, and I'll talk later on in the presentation, that the iron ore price and steel demand is continuing to be very buoyant. And without taking a stick to analysts, report on forward positions in iron ore and steel, they got it wrong. And I think they're starting to reassess their positions in relation to where the iron ore price will be and the forecast for steel moving forward. So let's go to the next slide, please, Jordan. So the next question I get asked is, where are we with our feasibility study? Well, let me just tick the boxes. Offtake and marketing and sales with Glencore is done. It's not a heads of agreement. It's actually a binding agreement for the first 10 years. It's done. They will do the shipping. They will do the financing of the product. So that's out and completed. Our tenure and our resource is completed. So that's done. Our mine planning is underway. Now that we've actually got a wireframe from our resource statements, our mine planning can move ahead. Metallurgy. Well, that's the next one. We've gone to tender there. We'll commence that well and truly before Christmas, and I'm targeting around the Christmas period to have that completed. But let me put a fine point on that. When you do magnetite drilling, you do a program called Davis tube testing, which is where you mimic the recovery of iron, which would occur through a process flow sheet in your plant. Macarthur's done 45,000 tests of its mineralisation at Lake Giles and Moonshine in Davis tube testing over the last decade. So when people say to me, "Oh, Joe, you haven't done enough metallurgy," well, 45,000 tests, I think that's pretty sufficient But I do understand that we have to fine-tune our process flow sheet, and we have gone to tender, and we have got a preferred supplier to reprocess and to reconfirm our process flow sheet, which then flows on to our engineering design, which is our final design solution for our feasibility study. And the final point is financing. Well, we're doing a couple of things there. You know, we're attacking our financing on two fronts. We've got Eddie Sugar out of New York, and Eddie's been working with us. And look, whilst we haven't been asking Eddie to find us funding at this point in time, what Eddie's been doing is using his extensive experience in the iron ore space and the investors within the mining industry to get the Macarthur story in front of these big institutions. Now, look, this little company, when we first engaged Eddie, had a market cap of around a drinks, about $10 million. As we've got a little bit larger in market cap, we're getting more recognition. But the beauty of it is that Eddie's opening the doors. I'm using Eddie's credibility to tell the Macarthur stories to institutions that normally I wouldn't get to see. And we, on a weekly basis, have detailed discussions with major financial mining institutions that have the capacity to fund all, if not part, of our required capex for this program. So, whilst Eddie's results aren't immediate, they are very much building the platform for the future. In concert with that, you'll also see that we've established an office in Seoul, and we've got Richard Moon on board. And I've got a slide down the back of this presentation that talks about Richard. And I'll let you into some secrets about what Richard's doing in Korea and also in Japan. So we've got a two-pronged approach in relation to our financing, and then over and above that, we've got Neil. And look, Neil's been getting us in front of the big banks, TD, BMO, Raymond James, Scotia. He's been doing his lifting as well. So we're not leaving the financing, the capital financing of the program to the very end. I don't believe in that at all. I believe that you've got to tell the story right through. I think people have to come on the journey with you, and as that occurs, we start to realise some market cap. We get the investors quite comfortable in relation to the story and knowledgeable about the story. We get some research behind us, and that allows the whole program to complete. Next slide, please. Okay, this is what I call we got it right again. In May, I talked about magnetite being the green iron ore. Well, you wouldn't believe it. Last week, I saw Vale come out and use exactly the same term for its Carajás fines. They talk about green iron ore, high-grade green iron ore. It's pretty impressive. We've got 1 billion tonnes of product, 1 billion tonnes of product. Now, let's put a value on that. Say you value your tonnes in the ground at a penny. That's $10 million. Say you value your tonnes in the ground at 10 cents. That's $100 million. If you value it at 50 cents, it goes up again exponentially. We've got a big resource. Do we have more than 1 billion tonnes? The answer is yes. We've got the largest iron ore tenement holding in the Yilgarn, substantially larger than anybody else, and the only other person in the area that's doing anything at the moment is MRL, Mineral Resources. They boast 100 million tonnes. We're well and truly into the billions. So it's up to us now to lose. We've got Glencore behind us to market it worldwide, and as I said, we're rapidly moving in completing our route to market in our feasibility study. Next slide, please. Okay, so there's our tonnages, and based upon our resource statement that we released to the market, we've got 53.9 million tonnes in the measured category, 218.7 million tonnes in the indicated categories. That's enough for our first 10 years. And then we've got the rest to drill out as we require. We're looking at an iron ore grade above 65%. Initial metallurgy put it in at 68 to 69%. I think that's too high. So we'll detune our process flow sheet so that we're not creating extra iron units which we aren't getting value for. Our mass pulls in the early testing work was very high, 45 to 50, which is very good, and our grind size is P80 45 micron. Now, all of that's subject to review based upon our final metallurgical test work, but look, our Davis tube test work to date suggests that we can make a concentrate well and truly over 66% with a recovery in the vicinities that we're talking about based upon a 45 micron grind size. You can see our tenements there. We've got granted mining leases. We've cleared native title and heritage. We've got no rare and endangered species on site from both stage 1, stage 2 fauna flora studies done. We've got approval from the EPA to mine off the hematite. And if we go to the next slide, I can show you what our hematite resource looks like. That's our hematite resource there. It's about 82 million tonnes with a 40% cutoff. Increase your cutoff grades up to 50 to 55%, and we do have some significant tonnes at high grade. Look, the key thing about the hematite is this. It's not sufficiently large that we can justify a big capital spend. But you'll see on the diagram beside us, our friends at Mineral Resources Limited have pegged and are commencing a survey for a haul road right through the centre of our property to access a property to our north, some 120 kilometres to our north. So, there's a commercial deal to be done. There's no deal in place at the moment, but there's a commercial deal to be done in relation to the short-term opportunity to remove that hematite off our site. If commercial sensibilities play out, and sometimes they don't in the mining industry, but if commercial sensibilities play out, we should be able to find a home for that, for those early high-grade hematitic tonnes. Next slide, please. Mine development. We're looking at a production profile of 3.4 million tonnes per year. People say, why, Joe, 3.4? The answer is very simple, 2 train sets. We've now got approval from from ARC Infrastructure to put our train sets on their network. And with a production profile of 3.4 million tonnes, that fully utilises 2 train sets. And hence that's what we're targeting for stage 1 production. As I've mentioned, we've got a generational supply of iron ore. I mean, when you talk billions of tonnes of resource, it's a substantial iron ore province. As I said, again, we've got Glencore in there. We're underway with our feasibility study. We're 100% owned. We don't have any royalties. We don't, we haven't sold a proportion of the project to anybody. We're 100% owner of the property. And we've got an 18-month construction period. Next slide, please. Bulk products is all about access to ports. And from the very first slide, I've talked about the Esperance port. It's a deep water port. It can handle anything between 14 and 24 million tonnes capacity through the iron ore loader. It takes Cape-class vessels. The shipping costs from Esperance to China is between $8 and $10 US per tonne. We're looking at, in the orange section there, at putting a 300 kilotonne shed. And if you go to the next slide, please, Jordan. You can see that the other day we announced the design of our Helix Dumper. And now that's a low-profile dumper that actually takes the rail wagons, tips them upside down, drops them into a 4-metre vault, and then moves that via conveyor across to our storage shed for export across the Dolphin Wharf 3 at a run rate of 45 tonnes per hour. Currently, that iron ore loader and the RCD at the Esperance port is only operating at 2,200 tonnes per hour. This petite piece of infrastructure allows the port of Esperance to optimise its throughput. And hence the commercial logic behind them getting behind what Macarthur's doing. It allows them to become more efficient and effective and put more tonnes through the same piece of fixed infrastructure at the Esperance port. So that was a fairly significant announcement. The market didn't move. I was surprised. I mean, we've spent a lot of time and a lot of money and a lot of negotiation to find a solution as eloquent as this one. Next slide, please. So we've talked about funding, and I've talked about EAS advisors, out of New York. All that's going well, and we really thank Eddie for his efforts. The next point is I did identify Richard Moon, and I'll talk a little bit about his background, but he's in Korea full time, and what he's doing for us over there is he's introducing us to the Korean steel industry. That's number one. Number two is Richard's also got a solid career in steel and iron ore with his time at Glencore, and he's well and familiar with the Japanese steel mills. And as I saw yesterday, Nippon Steel is moving ahead to become one of the largest world producers, and I'm encouraging Richard to reach out and to put the opportunities that we're presenting squarely in front of those groups. So if I can go to the next slide, I'll talk about magnetite and what's happening there, please, Jordan. As you can see, we've added another 2020 forecast in relation to the Chinese crude steel production. And look, a couple of points around that. The COVID-19 global stimulus is certainly driving that. But, let me just say that for the first time, India has been exporting processed steel products through to the Chinese market. And, who would have thought that the Indians, would be supplying finished steel products through to China when, China's been so dominant in that area. And in actual fact, India has increased its export of finished steel products to the tune of 140% year on year between 2019 and 2020. And now we're currently exporting 4.6 million tonnes of finished steel products, principally to China and Vietnam. But let's look at what's happening in China. I think that's the main game. And since we last spoke, you saw that the PMI index in China in February dropped down to about 35.8 points. It's now back towards the 50s to 52s, which is in really positive territory, which means that whilst there was a little bit of an economic shock in China to do with the COVID-19 pandemic, they've certainly recovered, and a lot of it's driven by what the Chinese government is calling their dual circularization economic model. And what this means is they're using the domestic economy to maintain and to create economic growth. So they're focusing internally whilst they are digesting complicated external market environments. So I think full marks to the Chinese government. They're doing a great job. They're certainly keeping the demand for steel high, and in my books, that means that the demand for iron ore is high, and that's a very, very good thing. And let me give you a couple of quick stats. I've just got to read these. The Chinese Steel Industry Association has identified that crude steel production is up 1.5% month on month, with finished steel products up 6.89% for the same period. So, look, things are still bubbling along, and that tolls well for the maintenance of the iron ore price. Next slide, please. Magnetite is still demanding a premium, as Neil identified. 62 and 65% seaborne iron ore is at a multi-year high. Still some ways away from when where it was. Yesterday, when I was preparing for this presentation, I went back to 2010, and you see the top of the chart here is at $140 US. Well, back in 2010. the actual prices at that point were about 170 to 180. So there's still a ways to go. What's different this time? What's different this time is whilst the iron ore prices are high and people like Vale, BHP, Fortescue and others are making super profits, it's also being reflected in an increase in the steel price. So the actual steel manufacturers in China over the last quarter, there's been a price lift in completed steel products between 50 and 100 US dollars per tonne. And that's fairly significant, when you look at the overall value per tonne of that product. So there still is a very strong demand for high-grade products. A lot of it's driven by the need for clean, green product, and magnetite certainly provides that. But also, there's been a big drive towards the scrap industry, especially in developed economies. And scrap prices are at multi-year highs as well, especially out of Europe. And magnetite and scrap are only used in electric arc furnaces. You cannot use scrap product in a blast furnace, which is a majority of the manufacturing in China. But as you see now, because of the clean air requirements in China and because of the energy efficiency of arc furnaces and the ability to turn off and turn on arc furnaces, you're seeing that some of the old blast furnaces are now being replaced by electric arc. So not only is there a product shift because of clean green requirements, but there's also a technology shift in relation to how steel's manufactured. So that tolls very well for the continuation of demand for high-grade, clean, magnetite-style iron products. Next slide, please. As we draw to the end of the presentation, I'd just like to acknowledge the significant work that's been done by Andrew Bruton. Andrew's been with me now 12 months. I've known Andrew for well over a decade. He was one of Australia's preeminent lawyers in relation to energy and port and rail infrastructure. I coerced him away from a 20-odd year practice in law. And I've got to attribute a lot of the successes that Macarthur's having during 2020 on our below and above rail and on open access port regimes. I've got to attribute much of that to Andrew, and I'd just like to thank him. And I'm grateful that his hard work is reflecting positively on the share price. Next slide, please. The next important member is Richard. I've mentioned him 3 times today. As I said, he's had a long-established career, originally in the military, but he was the Australian representative for Hyundai Steel, and he's worked with POSCO and also with Glencore. Look, Richard's got a burden to bear. I'm putting an enormous amount of reliance upon Richard's ability to deliver a strategic partner. That's what he's there for. I met Richard 10 years ago, and he was a very important person in the Australian industry, and I was quite humbled that he spent the time and spent a week with me, and he came to site and he had a look at the property, and we went to the port, and we ate many meals together, and we travelled many miles. And last year, just before Christmas, Richard rang me and he said, "Joe, do you have time for a quick lunch?" And I said yes. And he presented me with a book, and it was a book written by and about the chairman of Hyundai. And during these days of COVID-19 and restricted travel, I recommend that book to anybody. If you really enjoyed Lee Iacocca's book, and if you want to see a Korean perspective of a Lee Iacocca or even more successful man, read the chairman of Hyundai's book. I really encourage you to do that. I found it inspirational from a man who came from the rice paddy fields to creating out of his own vision one of the most successful international engineering and shipping and fabrication and auto companies in the world. Look, it's really worth your time to take the opportunity to read that. So that's it from me. I'm happy to talk through some questions. I've tried to make the presentation today a little bit different from the last one. I didn't wish to repeat the same story, but there is some new people listening in today that I needed to tell the basics to. But there's also some I just to add to the story that I told back in May 2020. But look, thanks everybody for participating, and I'm keen to take some questions.
Thank you so much, Joe. Yes, we're now going to move on to the Q&A portion of the presentation. So if anybody has any questions, feel free to pull up the Q&A portion of the webinar and ask your question in there. We already have some coming in. Now, there are a lot of people on here today, so I just want to let you know we'll do our best to get to as many questions as we can. But don't fear, those of you whose questions we don't get to, we're going to be passing those along to Joe after the presentation. He'll be answering them, and then we'll be sending those to you via email so that everybody has access to the answers to all the questions. So, Joe, there are questions in here. If you're ready to go, then we got some questions.
Yep, 100%.
All right. You had mentioned when we were looking at the Helix Dumper that it allows the Port of Esperance to put more tons through their fixed infrastructure. What tonnage increase or how much more revenue would this be for the port? Do you have an estimate?
Yes, well, look, it allows the port to move from anything between 14 to 25 million tonnes. So if you look at pricing of anything between $4 and $6 a tonne, you can work out the revenue increase. So it does enhance significantly the capacity of the port to handle not only Macarthur's product, because we're looking at a modest 4 million tonne a year, but that dumper itself has a 16 million tonne per annum capacity.
Great. The next one here is post BFS. At what price would you accept a buyout? And do you see the potential of an offer coming before we get to production?
Look, I think people are waiting. We have a generational supply of product. Anybody in the iron and steel industry globally must be looking at Lake Giles. If you've got a steel plant in Korea or a steel plant in Japan, and you could buy product from your own mine for $53 Australian per tonne, plus shipping, that's pretty attractive input cost, as opposed to buying it through a trading company or buying it directly via contract from a company itself at a significantly higher price. So yes, I think somebody will emerge. Let me say a couple of things about takeover protection. 70% of our shareholders are Canadian or North American, and that's very important. It means that our registers are split. Now, in Canada, you have custodians, and you have NOBOs and OBOs, non-objecting and objecting, beneficial owners. And a lot of the shareholding, we've got about 3,500 shareholders in Macarthur in North America, and a lot of them are unknown to me. Unless they physically reach out and talk to me, they're unknown. And that actually makes a takeover quite complicated. The fact that we do know who our shareholders are in Australia, but that only constitutes 30% of the register. Look, I've been around 12 years with this company, and some of the directors have equally as long or longer. I think we have a very solid 12 to 18 months worth of value that this management team and this board can drive out of Macarthur. There will be a time when we have our route to market, our feasibility study done, where somebody may take an opportunity to take us on in the market. That hasn't occurred so far. I think Richard's role in seeking a strategic investor may precipitate that. But look, at this point in time, we're not anticipating anything. But as I said, we do have some protection in relation to the way that our business is structured. both between Australia and Canada. But in saying that, it all depends on price, doesn't it? I mean, if somebody, we're dealing with a monster project, and a project that most junior companies would struggle to digest. When you talk about building an iron ore company with 1 billion tonnes of product and, starting off small, with 3.4 million tonnes, no different to Champion Iron, and then climbing the ladder in the production profile for the next 100 years. I mean, that's a big vision. That's a big, big vision. We certainly will need the support of a strategic. Whether or not that strategic gets to a point where it says, well, there's no role for the Macarthur team and we'll take it on ourselves, that's to be seen. That's probably the best answer I can give you. Sorry, it's a little bit elusive.
No, that's great. I have another one for you here. You had mentioned that the engineering and build out of the mine is roughly 18 months. Is that correct?
That's correct, yes.
Perfect. Also, can you make some comments on Mount Manning's potential? I know we're talking a lot about Lake Giles, but what about Mount Manning?
Yeah, 100%. Yeah, look, we picked up Mount Manning through a wholly owned subsidiary, which is the Esperance Export Iron Ore Company, Pty Ltd. A previous company, Salmon River, our resources did some drilling there, and got some very positive results. It's an enormous iron ore mountain. Let me not understate that. I mean, we've flown geophysics over it, and the resource potential reports, and this is not JORC or NI43, but the resource potential reports say anything from a magnetite perspective in the 2 to 2.7 billion tonnes, and it's also got a series of 3 hematite lenses, high-grade hematite lenses. It's all the geologists that I've talked to suggest that it's Coolia Nobbing Mark II. So it's a mine that both Cleveland Cliff mined, and then before them Portland, and then before that BHP mined in the early 60s. So it's got a beautiful, clean 60+% hematite product to it. What's the issue? The issue is that we're caught up in West Australian politics. There's certain elements there that would like to see the banded irons in that area moved across into a Class A nature reserve. Currently, the area is zoned for mining or gazetted for mining. But as I said, there's elements within the West Australian government that wish to see it as a proposed national park. Now, we're working with the native title claimants over that area to resist that property being caught up in that proposed national park. The native title claimants see Mount Manning as having no cultural significance to them. They've actually done their heritage and cultural surveys over the site. They see it as a solid commercial resource that could be exploited by the community of West Australia. They're not seeing it as a proposed national park. And look, it would be a great adjunct to Lake Giles, but as I said, there's still a little bit of politics to go in this yet, and we're working diligently to solve that.
Fair enough. I have one here. So do you have enough information on Port Esperance to complete the Bankable Feasibility Study? And are there any other gaps to get this completed? And there are a lot of people kind of asking in the questions here, just do we have an idea of an expected Bankable Feasibility completion date?
Yeah. Look, first things first, as I've said back in May, when I came back from Toronto and New York, they said 3 things, Joe. They said, Joe, get your resource sorted out. And we did that. They said, Joe, get your route to market sorted out. And, we've all but done that now. That were the first 2 things. And then they said, you really do need to, then once you've got those 2 components, then you can meaningfully create a bankable feasibility. I won't say 12 months. I'd like to have the bankable feasibility completed well within that period of time. But let me say this: we've got border restrictions in Australia. I mean, I've been trying to get to West Australia now for 3 months. 3 months, and every time I apply to the police so that I can travel to the property, or to hold meetings with the native title claimants, or to do any business at all, attend meetings with the port or the minister or MRL, the answer is no. So like the rest of the world, this COVID-19 is really restricting the abilities for people to move quickly. And look, I commend my team in relation to the work that they've done and what they've achieved over the period of COVID-19. I really do. But it is making it tough for people to travel, and that is having it's not an excuse, but it's having a bearing on the feasibility delivery timeframes. But going back to that second slide I showed you, you can see the steps that we're moving through in relation to completion of the feasibility study. The engineering design work, which is a final stage to that, that will take less than 6 months. But as I said, we've got to get clearance through the port first, because look, there's no point having an eloquent engineering solution and the best metallurgy in the world if you can't get your product to the market. So hence what we're doing.
Absolutely. I think that we're really coming up on 5 o'clock here Eastern time, so we'll call it there. Thank you so much, Joe. Everybody whose questions were not answered, we will pass those along to Joe offline, and we'll get him to answer those for you. But again, thank you so much to everybody for being here, and for you, Joe, to take the time to join us live here all the way from Australia. Thank you so much for your presentation.
Thank you, Neil. It's been a pleasure. Pleasure's all mine. Thank you.